So now let us kind of jump on and understand what is RSI. RSI stands for Relative Strength Index. Now RSI was designed and defined by this person called Wells Vida. He is the person who kind of really brought it to this world, and kind of he used few mathematical formulation, and he kind of was reviewing the markets very deeply. So he kind of came up with this and he created a relationship out of it. And it's very beautifully done, and that's what we are kind of using even now. So we should be grateful to that gentleman who kind of did that. So now, what does RSI really measure? So let me kind of explain this. Now, say you are driving a vehicle, a two-wheeler or a car. So when you drive a two-wheeler or a car, at the start, the speed of it at 0. When you start the vehicle, it's stationary, it is 0. Then you put it into a gear and you accelerate. As you accelerate, it starts to move. Now, once you accelerate, it starts from kilometer 0 per hour to 5 kilometer, 10 kilometer, 20, 50 kilometer per hour, and then eventually reaches 60 kilometer per hour. Now from 0 to 60, it takes, maybe based on the power of your vehicle, anywhere between 5 seconds to 15-20 seconds as well, right? Maybe even 30 seconds for some of the vehicles. So it takes, but now from 0 to 60, it took say 10 seconds, but from 60 to 120, it does not take another 10 seconds. From 60 to 120, it kind of takes just about 3 seconds. So that is called as momentum. When the momentum comes, it goes very fast. Now, relative strength index calculates and measures this momentum of the price. How fast is the price going up or falling down is what the relative strength index measures. So once again, relative strength index measures the strength of the price's momentum, how fast the price is going up or coming down. So the measure for relative strength index is between 0, let me put it here, is between 0 to 100. So this is the RSI measure. So what does it mean if it is at 20? What does it mean if it is at 30? What does it mean if it is at 40 or 60 or more than that or below that? That is what it means. That is what it means. So RSI measures the momentum, strength of the momentum of the price. Now, how do we really depict this? How do we really depict this, and how do we really study this? Now, commonly, it is said that when the price reaches a certain level, they say that, oh, price has reached so high. So now, since it has reached so high, from there, it may not sustain the price there and it may start to fall. So for it to have reached that high, it is also called as overbought. What is it called as? It's called as overbought. Now, opposite of that exactly is when the price has fallen too much low and it has gone below certain levels, it is called as oversold. So overbought, oversold. These are the two terms which are commonly used in the markets. Now in RSI, when the RSI measure it is at certain level, it is called as overbought, and certain level it is called as oversold. So now this way of looking at RSI is the traditional way. So now how do we look at that? Say for example, let me kind of do that. Say, so this is the price chart and below this is the RSI. Now RSI is an oscillator. RSI is not an overlay. It is below the price chart. So say for example, we have the price kind of going up like this. So if the price is going up like this, we will see the RSI also going up like this, something like that. So it will be in sync with the price. If the price wave is going up, RSI wave also kind of goes up. And if the price wave is falling down like this, we will also notice that RSI wave is also falling down like this. So it will be continuity in sync with the price. Now say let us kind of say that this is the price, and price from say from 200 it has reached 2000 in certain period of time, say in 1 year. So which means the price has all gone like this. So which means exactly during that time, if you plot RSI between 0 to 100, there is a possibility that the RSI was also kind of gone all the way like this, and maybe it would have reached all the way up to 80 levels. So which means RSI is going up, which means it is depicting and showing that the price is going very fast. If it is at 80, it is very fast, right? Like a speed of a particular vehicle. So that's how it is kind of depicted, right? Now, traditionally for a RSI, it was said that 70 and 30. If the RSI is above 70, this region was called as overbought. And people said if it is above 70 and in that zone, there is a very high probability from here the price may fall below. So people above 70 stopped buying anymore and waited on the sidelines to see if the market starts to fall and exited or sold it off. That is was overbought. And then if the RSI, say if the RSI is below 30, if it is below 30, it was told as oversold, which means the price has gone so low, below this it may not go any further and buying may start. So whoever has sold will kind of start to square up their selling position, or if they have not bought, they will think about buying when the RSI is below 30, so that it may now start to move back up. This is the traditional approach. This is the traditional approach to RSI, which many people still use. Now, how we will analyze RSI and how we will use it is slightly different, which is the newer way of doing it. So if this is the price, RSI is depicted here. What we will do is we will use two different measures, which will be RSI 60 and RSI 40. We will use RSI 60 and RSI 40. Which means the way we will interpret is, if the RSI goes above 60, we will call that as bullish. And if the RSI goes below 40, this one we will call it as bearish. And if the RSI remains in between, this we'll call it as sideways. Clear? Above 60, below 40, in between 40 and 60. Above 60 is bullish, below 40 is bearish, in between is sideways. So now, if the RSI, let us kind of put it here, if the RSI is, this is 60 and say this is 40, if the RSI is like this above 60, here price also will be rising, and if the RSI here is between, here price will be somewhere in between like this, and if the RSI is below 40, the price here also will be kind of going down. So bullish means above 60, bearish means below 40, in between is sideways between 40 to 60. So this is how we will use RSI. Right now, let us kind of see how RSI is plotted on a chart. So you don't have to actually plot anything. Very simple, right? It is readily available in all the charts. So for example, if I kind of go here, all that I have to do is click on where is RSI? Click on RSI Okay, tools, chart studies, and relative strength index, RSI. Where is RSI? Downchain channel. All right. RSI right here. RSI. If I click RSI, by default you will get something like this. You will get multiple colors and something like this. That's all you will kind of get. You know, it is depicted at 20 and 80 is what it's depicted. So what we will do is we will go right click here, go to properties, and what we will do is by default it should be for 14 length, which means 14, if it is a daily candle, it will calculate those RSI values for the last 14 days and then plot it. And it is a continuation of that 14-day period, right? So that is a standard one which Wells Fargo use, and it works very well. So let us stick to that 14. We don't have to change it, right? And it is based on close, and whichever color we want to give, we will give. We don't want any moving average there, so I'll kind of put it to 9999 and kind of so that it kind of gets vanished, and I don't want this. I'll kind of change the color, right? And then upper band, like I said, we will use 60, and lower band we will use 40, and I will say okay. This number has to be slightly 0, so I'll make it 9999, and then I'll make it 9999, and I will say apply, and I'll say okay, and beautifully you will get like this. See, this upper line is at 60, lower line is at 40, and in between RSI is kind of going up or down. See, if the price is going up, RSI is also up. If the price is falling, you see RSI is also falling. If the price is here going up, RSI also is going up. You can see this RSI on a monthly chart, weekly chart, daily chart, everywhere. So beautifully, line will kind of come up, and it will kind of see. And then we will use this for taking certain trades in the strategy. So now you should kind of understand this so that when I kind of teach you the strategies, you are able to easily put it onto your chart and start to use it. So as simple as this, RSI 14, and it will give you 60 and 40. Now Nifty, as an example, in this chart when I have opened it, Nifty is above 60 RSI, which means it's already bullish. At some point in time, right, it was even maybe below also. If I try to see here, at this point in time it was below at some point in time. So at that point in time, see, the price has kind of really fallen. See here, the price has fallen and it has gone up to below. And see here, next day, after a few days, it has risen, gone above 60, which means it is bullish, right? So that is how we will use this RSI, right? What are the strategies? We will discuss that in a bit later, but this is how the RSI is kind of plotted. So if you kind of understood this, type in the comment, got RSI. Let me also show you how it is plotted in few other softwares. Zerodha, very simple. All you have to do is go to studies, and there are many studies here. Don't get mad about all of these things. Just kind of take these two, RSI, click on RSI. By default, you will get this. And if you want to make any changes, click on this. Here they have given 80-20. We don't want 80-20. We want 60, and we want lower one. We want it at 40. That's all. And say done, and it will show you neatly. See, two lines, 40-60. If the price is going up, RSI is above that. If the price is falling, RSI is below 60. As simple as that. Once you plot this, you can see it at any time frame. If you want to see it at 5 minutes, RSI at 5 minutes, RSI at 15 minutes, everything you can kind of neatly see. As simple as that. Very simple, very easy to understand. So this is all about RSI. If you got this, type in the comment, got RSI. How to use this, how to kind of interpret this, when I teach about the strategy, we will do. For now, all you have to know is above 60 is bullish, below 40 is bearish, in between is sideways. Period. Simple. Hope you kind of really got this and enjoyed. I'll see you in the next video where we will discuss about simple moving average.